Let's now understand level 3 input, and that is unobservable inputs. So once again, what is our driver as a valuation professional? Our driver is to do the valuation of an asset or a liability that comes in front of us. And when we do the valuation, what we really do, we do not find any value, we find fair value. सो अगर हमारे सामने एक एसेट आ गई जो कि कोटेड नहीं है स्टॉक एक्सचेंज पे, कैन वी से दैट आई विल नॉट डू द वैल्यूएशन ऑफ दिस एसेट? ऑफ कोर्स आंसर इज नो. The only thing is, I know that I do not have label 1 input available with me for valuation of this input, and therefore I will have to use the label 2 input. And what is label 2 input? Are the observable data, observable information, observable input. That means informations which are available in the public domain that would help me in the valuation of the asset that has come before me for the purpose of valuation. And that is where your comparable company method or comparable transaction methods come to the fore. Now the asset that I have got for valuation, it does not have a comparable company also, it does not have a comparable transaction also. Do I say that to the client, no, I will not do the valuation of this asset because I do not have the label 1 input, I do not have the label 2 input? Of course not. I would still do the valuation. The only question is, how will I do the valuation of this asset? For as per IndAS 113, I will have to use the unobservable input or unobservable information or unobservable data for the valuation of this asset. और इसको समझ के लीजिए, unobservable input का मतलब क्या है और या फिर डाटा और या इंफॉर्मेशन का मतलब क्या है. अनऑब्जर्वेबल इनपुट का सिंपल सा ये मतलब है कि इस एसेट के बारे में पब्लिक डोमेन में कोई भी इंफॉर्मेशन अवेलेबल नहीं है जिसको कि यूज़ करके आप इस कंपनी का वैल्यूएशन कर सको. इसका मतलब इस कंपनी के बारे में कोई भी ऑब्जर्वेबल डाटा या इंफॉर्मेशन अवेलेबल नहीं है, इनपुट अवेलेबल नहीं है. इसका मतलब क्या करना पड़ेगा? इस एसेट का वैल्यूएशन करने के लिए आपको अनऑब्जर्वेबल इनपुट का इस्तेमाल करना पड़ेगा, यानी कि आपको इंफॉर्मेशन क्रिएट करनी पड़ेगी सो दैट यू आर एबल टू डू द वैल्यूएशन ऑफ दिस एसेट. सो व्हाट इज द unobservable inputs? Observable inputs are inputs for which there is no market data available, as we discussed. What are the examples of unobservable input? So the examples of unobservable input: number one, internal forecast of cash flows from assets, tangible or intangible, doesn't really matter, all the assets. तो सबसे पहले क्या करा जा सकता है कि जो कंपनी के इंटरनल फोरकास्ट हैं अबाउट द कैश फ्लो, उनका इस्तेमाल किया जा सकता है. सो व्हाट यू डू, यू टेल द क्लाइंट, डज द कंपनी हैज़ एनी बिजनेस प्लान? सो इफ यू हैव अ बिजनेस प्लान, share it, a copy of that with me, and that business plan can be used for taking out the cash flows and then use it based on the discounted cash flow method. Number two, adjustments to current prices of similar properties, for example physical conditions and locations. Now this is something that can be done, but then it's a big challenge. Because why it's a big challenge? Because you do not know as to what these similar properties are. If you are able to get some similar properties, then your life becomes easy, because then really speaking it becomes an observable data. But if it is not available, then you will have a challenge as to what to do. Number three, estimates of growth expectation and profitability when calculating the value, impairment or goodwill or otherwise, doesn't really matter. So this is irrespective of goodwill, irrespective of impairment test. For any valuation, what you can do, you can estimate of growth expectations and profitability, and using this create your projected cash flow statement, PCFS, projected cash flow statement. And ये जो आपने projected cash flow statement बनाया है, you discounted by your cost of capital, and total of all this will be your value of that asset, and that's your unobservable input. profit margin expectations, obviously. So if you want to do the projected cash flow statement, you will have to take into account the profit margin expectations for arriving at your projected cash flow statement. Now the question is, will DCF fit here? Will DCF fit here? Will discounted cash flow that we use for the purpose of valuation in many cases, will that be considered as level 3 input? And the answer of course is yes. The answer of course is yes. And why the answer is yes? Because this projected cash flow statement that you have prepared is not a level 1 input, it is not a level 2 input, it is an input that you have created or the company has created, and then you use it for the purpose of valuation, and that is why it is level 3 input. And since it is level 3 input, the discounted cash flow is the best example of level 3 input. As a matter of fact, and this is where I would like to mention, many of the IPOs that are coming today, unfortunately or incidentally, the valuation that they are using for determining the IPO prices are, really speaking, not based on label input 1, not based on label input 2, and not based on label input 3. And that is why those valuations, really speaking, does not have any basis. And that is the reason why there are so many fiascos happening of the IPOs. And the point that has to be considered here, that it is high time that the regulators in our country, be it SEBI or be it RBI or be it IBBI, be it MCA, all of them collectively needs to bring out very clearly that any company which is coming out with IPO, it has to use discounted cash flow method for the purpose of fixing the IPO price. Fixing IPO price arbitrarily, as has been done in most of these recent IPOs, and I'm sure must be the case earlier also. All these arbitrary fixation of the prices following the book building process based on the so-called demand and supply position is absolutely fictitious and causing huge heartburn and burning of precious hard-earned money of lot of retail investors. And more so because IndAS 113 clearly mentions that any valuation that is done in this country has to be in line with the fair value hierarchy as prescribed under IndAS 113.